moderate and temporary in China in 2013. What are your views?
We're starting to see a very modest impact from earlier stimulus measures. And remember, the stimulus itself was modest in magnitude. We're seeing a pickup in public housing. We're seeing a pickup in highways and railways investment. But again, it's modest in scope. What we're not yet seeing is a recovery in the private sector. So this is an economy that's still very much dependent on public sector spending.
The Central Committee meeting takes place in the next few weeks. What can we expect from that meeting? Xi Jinping already said that he will lead towards more economic reforms, but we don't know the target yet.
Exactly, and Hu and Wen, when they had their first meeting 10 years ago, they made very much the same promises, and not a lot has been done since then. So if there is reform, it's likely to target the financial sector. This is often the easiest place to reform. What we want to see, and we're unlikely to see, is genuine reform of the state sector. Not just breaking up monopolies, but also the oligopolies, situations where you have half a dozen state firms competing with each other. It appears that there's competition, but the private sector just can't get into the game. That's where we need to see reform, and it's unlikely we will.
To what extent is inflation going to be a problem and a hindrance to its growth bias in the agricultural sector in 2013?
For the time being, inflation pressures appear to remain low. And insofar that we don't expect major stimulus, producer prices or producer inflation is certainly unlikely to be a major risk. But that said, inflation really is the Achilles heel of this economy. A sudden pickup in inflation, whether because of a shortfall in food as a result of bad weather, or a pickup in oil prices as a result of conflict in the Middle East, could really challenge this economy, because all of a sudden you see real wage growth stall, private consumption weaken even further than it has over the last 6 months, and popular expectations from the new leadership will just rise, and the new leadership will struggle to meet those expectations. A major challenge, but unlikely in 2013.
We have a supply overhang in the Shanghai market, and PICC is listing its IPO in Hong Kong. It's now the right time to raise money through the stock market, or is it still reasonable to raise funds from the bond markets?
I think it's reasonable to still go to the debt markets. I think interest rates will remain low. Insofar the government appears unwilling, and rightly so, to announce major fiscal stimulus. Interest rates should remain low throughout 2013, and I think investors, once the new leadership's honeymoon period wears off, investors could be a little bit more disappointed about the outlook in 2013, and I don't see equity markets going anywhere fast anytime soon.